Inflation is a pretty hot topic these days, and few people say it's nothing to worry about unless you're the Federal Reserve or U.S. Treasury Department. But with all the doom and gloom we see in the headlines sometimes, we're left wondering, what do we do about it? And that's what we're going to cover in this video today. We're going to look at places you can put your money during times of high inflation to get through to the other side of it. Let's get into it. Inflation is something we cover a lot on this channel because it has the potential for a lot of economic pain if it gets out of hand. Things like food and gasoline prices can make or break a household if they get too high and incomes are not keeping pace. So we talk a lot about it, but something we don't always talk about is what you can do about it. I started this channel to find a better way to bring economic insights to people in a way that they can understand and use in their own life. And that is what this video is about today. We're going to be looking at things that you can do with your dollars now so that you can be better prepared for the future if inflation gets worse and lasts longer than the government is leading us to believe. Now, there's different ways that we can approach this, and today's video is going to be the first in a series we'll do on the topic. So make sure you're subscribed and hit that notification bell down below so you know right away when our next video on the topic comes out. Today we'll be focusing on gold and silver. We're going to look at why it's a good idea to have some, especially during times of high inflation. At this time, I'm going to drop my usual disclaimer so I don't open myself up to legal liability. I am not a certified financial advisor. This video is not financial advice, and you are responsible for your own financial decisions. Okay, so first up, why should you own gold or silver? I personally think it's a good idea to have some, whether you're concerned with inflation or not. Simply put, they retain their value and they've been accepted as real money for thousands of years. This fiat currency we have called the US dollar isn't really backed by anything. Fiat currencies generally have poor track records over time, and few survive over long time horizons as they're usually printed into oblivion by the authorities that control and issue them. Gold and silver can't be printed. You can mine more of them, but the supply on the planet is fixed and you can't make them. Because of that, they don't change much in real value over time. I once heard that in the Roman Empire, an ounce of gold could buy you a set of fine clothes. When I look at the market price of gold over the last year, it's been hovering between $1,700 and $2,000. Could I get a set of fine clothes for that amount? You bet I could. A decent suit with shoes, shirt, and a tie would set me back about that much. And that's how it works. It retains its purchasing power over time. The dollar goes down in value because the Federal Reserve keeps printing dollars. You can't keep increasing the supply of something and expect it not to lose value. In fact, they completely expect it to lose value. It's actually a policy of theirs. They target 2% inflation as official policy. That means the dollar you have today in general will not buy as much of the same thing next year. But this isn't the case with gold. What it buys me today, like a set of fine clothes, is what I would have been able to buy thousands of years ago. That's a pretty good store of value if you ask me. Now, you can definitely nitpick the time frame for how the price of gold in dollars has trended over time and say, hey, it didn't do very well in this period, but you can do that with any asset. So, let's take a look at the performance of gold over a long period in recent history. President Nixon effectively took the U.S. off the gold standard on August 15, 1971. Now, at the time, the dollar was valued at $35 for 1 ounce of gold. As of the market close on Friday 6, 2021, the spot price of gold was $1,760. That's a 4,929% increase. Compare that to the S&P 500 over the same time period, and we see a lower 4,570% increase. By that metric, gold does better than even the stock market. Now, if you take into account the dividends you would have got by holding S&P 500 stocks and reinvested them, you would have gotten a higher return. but I think that this shows that gold has really held its own against even the stock market since we went off the gold standard. You could think of gold as a long-term investment if you want, something that's a conservative play and won't pay you a dividend, or you can think about it as a store of value, something that will allow you to keep the purchasing power you have today. When you're thinking about a high inflation environment and what you can do to protect yourself, that is really what you want, to preserve purchasing power. When I see things like food prices heading higher and consider where they could go if inflation were to take off, I get a peace of mind thinking that I have a little bit of gold and silver to help my family ride that out if it becomes a reality. Now, I hope this video has been useful for you. If it has, please give it a thumbs up and leave a comment down below on what you would like to know more about when it comes to where to put your money during high inflation, or anything else you might want to know about gold and silver in general. If you're interested in learning more about investing basics, we have some videos in our classroom playlist you might want to check out, and I'll leave a link to the playlist in the description down below. Each month, we also provide an inflation outlook video where we track the current trends to see if that higher inflation is coming and how fast. So make sure you're subscribed, hit that notification bell so you know right away when that next video comes out. Thank you for watching, and I'll see you in the next video.